Hi, my name is Doug Knoll, and in this video we're going to answer the question, what is a Regal Assets self-directed gold IRA? And at the end of this video, get my free 10-part training on how to invest in gold and get your free precious metal investors kit from Regal Assets. First, I'm an investor, not an advisor. My opinions are my own, and Financial Freedom is my professional review YouTube channel. I may receive compensation from the companies whose products I review and recommend, and Financial Freedom is independently owned by me, and the opinions expressed here are mine alone. Although I do my best to be objective, my recommendations may not be neutral or independent. And of course, be sure to investigate, ask questions, and seek professional advice on any investment decision you are contemplating. In a moment, I'm going to show you why the recovery from 2008-2009 has been built on a house of cards that is about to collapse. But first, what is a Regal Assets self-directed gold IRA? The IRS has created a special class of IRA that permits non-traditional investments in a retirement account. These are called self-directed IRAs. Because the investments are non-traditional, there are special rules that must be followed. Some of the differences between a traditional IRA and a self-directed IRA are: a traditional IRA is an IRA that holds securities and cash, such as stocks and bonds and mutual funds and certificates of deposit. A self-directed gold IRA is an IRA that allows an investor to hold gold coins or bullion or other precious metals in a retirement account. A traditional IRA requires a custodian, but you make the investment decisions. A gold IRA requires a custodian and the purchase of investment-grade bullion or coins and a deposit of that metal in an IRS-approved depository. Once you decide on your precious metal investment, there is no other decision to be made other than to cash out. A traditional IRA may have a setup fee, but typically the only other fees are investment advisor or brokerage fees on transactions and buying and selling securities. A gold IRA will typically have the following costs: a setup fee, annual administrative fee, annual storage fee, a minimum purchase amount, and a cash out cost, because typically you can only sell at wholesale. So if gold prices have dropped, you can lose. A number of companies specialize in self-directed gold IRAs. Choosing a company to work with means that you look at their reputation, client satisfaction, costs and fees, the ease of doing business with the company, and the personal rapport and trust you build with an account manager. I recommend Regal Assets because, in my opinion, it excels in all of these categories. Earlier, I said I'd show you why the recovery from 2008-2009 has been built on a house of cards that is about to collapse. So let me talk about the unintended consequence of quantitative easing. So quantitative easing has been the activity of the United States Federal Reserve Bank in buying up assets in order to inject liquidity or money into our economic system. Low interest since 2010 has induced high levels of corporate debt. And this corporate debt isn't to expand, it's to do corporate share buybacks that have been based on debt, not on productivity. And the effect of buying back shares raises the stock prices, which is why the market has been rising. The market has not been rising on productivity, it has been rising on debt. And this is why the 1%, the top 1% of the wealthy in the world have become extraordinarily more wealthy from 2010 to 2019. Wages and wealth for everyone else remained static or grew very little because of limited productivity growth. And this emergency policy developed back in 2010 has morphed into a long-term policy that is getting even now more extreme in the pandemic of 2020. Anthony Randazzo of the Reason Foundation wrote that quantitative easing is fundamentally a regressive redistribution program that has been boosting wealth for those already engaged in the financial sector or those who already own homes but passing little along to the rest of the economy. It is a primary driver of income inequality. Quantitative easing leads to an asset bubble forming in the market. The market, like the economy in general, becomes hooked to the increasing amounts of monetary stimulus that are received on a day-to-day basis. And once this stimulus stops, people start pulling their money out of the markets, causing prices to crash. In addition, low interest rates create a huge hazard for us. If interest rates went to a very modest 4%, there would be huge corporate and bank defaults. So the Federal Reserve cannot afford to raise interest rates for this very reason. And therefore, the market cannot function normally. And none of this can last. Something must give. And that something is going to be the stock market in what I believe to be one of the most massive crashes, the most massive crash we have ever seen. So if this has been interesting and useful for you, click on the link below to sign up for my free 10-part training on how to invest in gold and get your free gold investor kit from Regal Assets. Be sure to click on the link below, right there. And we'll see you soon.